Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. Gutteridge of Invesco remaining bullish on equities, writing, "We're seeing resilient growth, moderating inflation and more accommodative monetary policy. Despite challenges, this is generally a supportive mix for equities." Ben joins us now. Ben, let's talk about one of those challenges, the election. How do you expect us to trade over the next few weeks into that one?
Well, look, I mean, there are multiple outcomes, both of different colour and different mix, and one would expect the market can so easily have a tantrum to one outcome, could so easily fly on another. But we would say over the fullness of time, markets tend to sort of fade extreme reactions. I would say such is the dynamism of the US economy and quality of management and innovation within businesses that despite hedge funds, whacking on and taking off trades, from one day to the next in and around the event, stock markets can get through this in a positive, would get through this in a positive fashion.
Ben, how much of a constraint is the bond market right now with 10s back up to 422 and a 2-year with a 4 handle?
It's not a constraint just yet. I think whilst the Fed and the market still believes we're in a cutting cycle and that growth can remain resilient to that, alongside that, then markets can continue to perform. I think quite as expected. Markets will sort of check themselves and showcase volatility as the pace of cuts slows, and there are some question marks about whether hikes come back to the table, but the trend remains a disinflationary one and therefore supports a cutting cycle, and therefore I think markets can deal with yields at this level.
Let's define markets, Ben, when we talk about markets being able to deal with rates where they are, even as they climb a bit. And I say this because we have seen a challenge to the rotation trade. We've seen a challenge to this idea that small caps and the rest of the 493 in the S&P can perform and outperform. We've seen a challenge to that as yields go higher. Do you think that sticks?
Yeah, I mean, it looks to us as though there isn't sort of an imminent catalyst for a yield reversion. Of course, growth looks better, so a reappraisal of how dovish the Federal Reserve might be. Certainly a focus on supply of bonds, given the sort of political agenda really of both parties, and better growth. So, it does look as though yields will be are well supported at this level. That supports, we would say, higher quality. The funding challenges that higher yields bring suggest that higher quality businesses might continue to sort of shine in this environment. But I think ultimately we return to a disinflation narrative, and that the sort of softer landing, resilient growth becomes the focus once again. So in time, I think there is a sort of a catch-up trade from the sort of small mid-caps, but perhaps that's not the immediate position to take today, given there is some nervousness about this sort of high yield environment.
Ben, we're talking about the higher yield environment in the U.S., but as John was mentioning, it's global. And we've seen yields really tick up around the world, even when the data might not be as obviously supportive as in the U.S. How much is the U.S. setting the tone and the rest of the world gets subjected to it? And that's it.
Well, I mean, I think that is the case. I mean, I'm sure it's not quite such a surprise for everyone that is the case. I mean, it's interesting at this moment. I think, as you sort of said, is that Europe's going through quite an appreciable sort of growth wobble at the moment. Certainly some, the manufacturing weakness weighing heavy on the European economy, and yet bond yields moving higher, sort of dragged higher by what's happening in the US. But, such is the dominance of the US economy, and such such support, avoidance of recession in the US offers the global economy that is sort of dominating at the margin on bond yields. But for sure, the growth challenges look a little more precarious in Europe, and therefore the opportunity for duration, for buying bonds and the opportunity in yields looks a little bit more apparent at this moment in Europe.
One place in Europe, though, you do like is the United Kingdom. Why do you view that as a hedge?
Well, I don't know if you've heard the argument before, but valuation looks interesting. You tend to get a bit of eye rolling at that because it's been sort of trotted out, I don't know, for the last 15 years or something. But valuations certainly look interesting relative to some global comparators. Certainly dividends are always interesting. But I think relative to some very downbeat expectations, growth could impress. But look, the hedge reflects, sort of commodity-rich components of the UK market, and thinking about a geopolitical hedge in amongst the valuation hedge makes it a reasonable portfolio complement to a more substantial position in US equities that we harbour.
Hey Ben, it's good to hear from you. Ben Gutteridge there of Invesco on the latest. Morgan Stanley's Matt Hornbach thinks the bond market is less exposed this time around, writing, many investors see the Republican sweep outcome as most bearish for US Treasuries. We think any rise in Treasury yields would be more contained than in 2016 based on a comparison between expectations for Fed policy today versus then. I'm pleased to say that a good friend of ours, Matt Hornbach, joins us now. Matt, let's jump into that story together. Give me some more detail on that. The bigger difference now, between now and 2016.
Yeah, John, well, the differences extend well beyond what people expect the Fed to deliver over the course of the next couple of years. But certainly the Fed is a very big part of the story. In 2016, we have to remember that, Janet Yellen's Fed was about to embark on a rate hiking cycle. It was the second time they were trying to start it up. And investors generally expected the Fed to be hiking rates very gradually going into that election. In the wake of that election, of course, investors changed their minds very quickly, and over the course of that next year, revised higher their expectations for Fed policy to the tune of about 1.25%. Now, 1.25% doesn't sound like that big of a deal today because we've just lived through 525 basis points worth of rate hikes in 2022 and 23. But back then, 125 basis points was quite a big deal. And so if we take that number, John, and we apply it to today's environment, that would essentially be the same thing as saying that investors would go from expecting the Fed to cut rates modestly to no more rate cuts in this cycle. And that's a leap that I don't think investors are going to make in this particular cycle, which ultimately means that the bond market sell-off will be more contained.
Matt, there's an argument that this time is different because the deficit is different. It's significantly bigger. We just had a cycle where we got fiscal stimulus into a growing economy, a healthy economy by many measures. Why is the deficit issues not a concern for you? And I'm not talking about the short end or the specific rates tied to Fed policy, but the long-term rates that are more hinged to the fiscal outlook potentially.
Lisa, I'm really glad that you asked me this question. I have a strong view that in the end, what moves the bond market are how investors change their expectations for fiscal policy or for Treasury supply. And if you ask every investor in the marketplace today whether we are going to have bigger deficits in the future, irrespective of the election outcome, to a person, you will hear the view that, yes, we will have larger deficits. It's already expected by most investors, and therefore it is already in the price to a certain degree. And the question then is, what type of deficits do we get over the next 5 years relative to what people expect already? That's going to be the most important part of the bond market reaction to this election. And so in the end, it's how people's expectations change vis-a-vis the deficit is what ultimately moves bond markets in any given period of time.
That said, Matt, given how bearish some people are getting on bond yields and the expectation we heard from T. Rowe Price that potentially we could get 5% on a 10-year yield, how aggressively are you buying longer-term bonds right now on some of the backup?
Yeah, well, look, I certainly think that there's value in the Treasury market, but a lot of that value depends on knowing an outcome that at this point in time is unknowable. So what we've been telling investors is to hug their benchmarks tightly and wait for the opportunity to arise in the wake of the election, an outcome of which is very uncertain. In addition, the timing that we will know that outcome is also somewhat uncertain, and therefore, I think investors are best placed to hug their benchmarks tightly. And so, in terms of the duration exposure, Lisa. It's really about where you think any additional Treasury supply will come. And in the end, when the Treasury increases coupon issuance, they don't do so just in the 30-year Treasury bond. They increase supply generally across the yield curve. And so for investors out there who are worried about higher deficits, who think that those deficits will be larger than the marketplace is priced for, my recommendation is to be underweight the intermediate sector of the yield curve, not necessarily the long end, because in the end, when the Treasury increases supply, they're going to do it across the curve, and so the weighted average of that supply is going to hit most strongly in the intermediate sector of the curve, the 5 to 10 year sector.
Matt, I've got 40 seconds left. I want to squeeze this in. Dollar stronger against everything in G10. The intraday chart of dollar yen today is just this slow and steady march up and to the right. 152.96, about to break through 153. What's the story there?
Well, I think largely the story is the U.S. economy has once again proven more resilient than fears had suggested. And as a result of the interest rate complex moving higher, taking real returns in the U.S. higher, that's going to attract capital into the U.S. It's going to put upward pressure on the U.S. dollar. Of course, just like there's some degree of a pricing of a potential election outcome, there's probably something going on in the dollar just the past week, really, that is perhaps putting some higher probabilities on an outcome involving tariffs. And a lot of investors think that the dollar is going to go up on tariffs.
Matt, appreciate it. Matt Hornbach of Morgan Stanley. Evan Roth Smith writing, the best testing closing arguments against Trump are those that emphasize his lack of support from his former cabinet and numerous Republicans. Slingshot's Evan Roth Smith joins us now for more. Evan, welcome back. It's good to see you.
Thank you.
I see commercials like that absolutely everywhere, which begs the question, if that's the best testing case, why is this race still so tight?
Well, the race is tight because the electorate is tight. We have a structure in our electorate right now where Democrats need to overperform at the national level to even have a chance in the swing states. And every poll shows this closing up to a very, very tight race. This is what every pollster has been saying for months, right? This is going to, not just pollsters, it's going to be a 50-50 race. It's going to be really, really tight, but now we're living that reality because the polls have gotten there.
Evan, you say this is their best test in terms of their message they need to get out. And it comes at a time when you have John Kelly speaking to the New York Times, and he basically says that Trump is the definition of fascism. Mm-hmm. Is this, though, diluted in the sense that we have heard this for years for members who were part of Trump 1.0?
Well, so this was the best testing closing argument we had in terms of going after Trump, right? The kind of language you saw from her around her mission, her goals around the economy, around working people, and Donald Trump as a patsy of the wealthy and who will cut taxes and who will be fiscally irresponsible as well, as sort of the undertone to that, is still the best thing for her to say about herself. But yes, many people in the electorate are worried about this. Nikki Haley voters, people who supported her in the primary, who are Republicans instinctually on policy, are worried about things like a former Trump White House chief of staff coming out and saying the guy's a fascist, don't let him back in.
They've been doing a lot of campaign events with Liz Cheney, but then you hear from Governor Tim Walz, who says, well, we want her to be a part of Kamala Harris's campaign, to talk about the fact, to give basically this idea to Republicans, it's okay, you can vote for Kamala Harris. At the same time, he said, we're not going to take any of their foreign policy advice. So what are you getting if you are, say, a Nikki Haley Republican and thinking about voting for Kamala Harris?
You're getting some sense of security that the Democrats are not this foreign entity that you can't cross over, that it would be verboten for you to cross over to. Nikki Haley voters in our polling, these people are really Republicans. They're Republicans on economic policy. They're Republicans on immigration policy. They're Republicans on just about everything. They love George W. Bush. They love Condoleezza Rice. They love that era of Republican politics. And there's a lot of push out of the Republican Party from Donald Trump on them. They do not like Donald Trump. But we need to establish some pull into the Democratic Party if they're ever going to cross over. Because they've already voted against Donald Trump once in the primary. And what the Democratic Party needs to do is to get them to vote against him a second time. That's a fairly tall order, but you need to make them comfortable doing something that their entire lives they've rarely done, which is vote for a Democrat for president. And that's what Liz Cheney is there to do.
Kamala Harris was asked on The View what separates her from Joe Biden. She said, well, really nothing really comes to mind. How bad was that for her?
That was pretty bad. We tested it out. It was the worst possible thing she could have said in that moment compared to the other things we tested.
Why wasn't she prepared for that question?
I think she was prepared. I just think she has hang-ups, and I don't think they're ill-considered or dismissible around how it's perceived for a vice president to be disloyal to their president. Also, by the way, for the first female vice president to be disloyal to their president, for the first black vice president to be disloyal to their president. It's sort of a cruel joke of history that to elect the first woman president, she's now been tasked in the final weeks with some supreme act of disloyalty against Joe Biden, right? That's pretty messed up. But she's dialed that answer in, right? We saw yesterday in that NBC interview, I believe. She gave a much more pointed answer about price gouging and housing prices. So she's gotten there. She's gotten more comfortable with it. But she's a loyal, dedicated member of this administration.
Do you think that it's a good thing for her to go on Joe Rogan's show after Trump?
Yeah, I think it's a great idea. I think she should absolutely do it. Not just because any time that she goes out and does an interview and talks to people, it works. We tested all sorts of clips, even moments we didn't think were particularly good from those first rounds of things she did with people like Oprah. And 60% of anyone of voters who saw clips of her doing interviews were like, that was great. Even if those of us in the media and politics would have gone, I would have tweaked that this way, that way. So when she goes on these media appearances, it works for her.
At this point, we are seeing the polls seem to favor Donald Trump. We're seeing that pretty much across the board. You're kind of nodding back and forth. Last time you were on, you said that you think pollsters are so self-conscious about getting it wrong in terms of not skewing the data enough to Donald Trump that they're actually overweighting him. Do you still think that?
I think the odds of an error in this election, a polling error, likely are a polling error in favor of Kamala Harris. And there are a couple pieces of evidence that might support that. One is, frankly, the last time we had a black candidate at the top of the ticket. Barack Obama in 2012, polling underestimated him by 6 points in any given swing state, because polling is good at establishing what a given electorate is going to do. It's not always so good at picking up at changes in the electorate, like the kind of high turnout you get from black voters when there's a black president on offer. And the other thing is the last election we have, the 2022 elections, was a polling miss in favor of Republicans, right? That overestimated Republican support. So people like to talk about the 2020 miss, the 2016 miss, but the last national election we had in the 2022 midterms was a large multi-point miss that overestimated Republican support. So I think there's plenty of reason to believe that if there is a polling error, and by the way, I don't think there necessarily will be a polling error, but if there is one, that Kamala Harris is a likely beneficiary of that error rather than someone who will be punished by it.
We've got to squeeze this in. This weekend, Harris is in Texas. Mm-hmm. Donald Trump is around the corner at Madison Square Garden here in New York City. What is going on there? What do you think that's all about?
It's the attention war. It's the attention war. You can go to Wisconsin 20 million times. You can go to North Carolina 20 million times. But these closing weeks of the election, you have to get into people's living rooms, not just the people who come out to a rally to see their favorite candidate. You have to get attention. You have to get chyrons. You have to win the news day. And doing a big rally at MSG or doing a big appearance potentially with some sort of celebrity maybe in Houston. is a way to do that, and a way to at least, these people have jets. They can go back into the swing states the next 5 minutes. So winning the attention battle with a couple hours of your time and then going back to the campaign trail is not a silly way to spend your time.
It's getting a lot of attention, that's for sure. Evan, it's good to see you. Thank you, sir.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.